Hi, everyone. Welcome to our webinar on the wood and pellet heater tax credit. We're going to get started in just a minute or so here, but welcome and thank you for joining us live today. And we'll get started in just a few seconds here. Hi, everyone. Welcome to our webinar today on the wood and pellet heater tax credit and what you need to know and how to make yourself a resource to your customers. So just to start things off with what topics we'll be covering today, we'll be talking about what is the tax credit, how is it claimed, who is claiming the credit, what's going on in Congress to extend the tax credit. I'll go over some frequently asked questions that we've received over the last year or so, and then we'll end our session today with a live Q&A. We are working to keep this to 45 minutes to ensure that you can have as much time as you need back to yourself so we don't hold you to the top of the hour and can get other things done. But please submit any questions you have via the chat on Zoom. We'll answer as many questions as we can at the end of the webinar. And all attendees are muted. Please be sure to turn your cameras off. And a recording of this webinar will be available on the HPBA website within 24 hours of this webinar. So again, feel free to submit any questions that you have throughout the presentation in the chat, and we'll get to those at the end. And if any of you happen to not be an HPBA member and have found yourself on this webinar, you should join today or look into joining very soon. We have a link here to HPBA membership and learning more about how to become a member as either a manufacturer or a retailer, rep, distributor through one of our regional affiliates. There's a lot of benefits to being an HPBA member, including getting updates and the latest information about government affairs issues like the tax credit, like different regulatory issues, electrification policies, and there's also several discount benefits with NFI, the trade show, consumer marketing materials, and also women members are invited to participate and apply to be in our women's mentoring program. And you can find more information about that on our website. So with that, I'm going to read a little disclaimer about what HPBA can and cannot say and the grain of salt you should take from this webinar. So HPBA and its affiliates do not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide and should not be relied on as tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. So with that, we're going to get started with what is tax credit? What does it require? So a product, in order for a product to qualify for the Section 25D tax credit, 25D is the part of the tax code that this credit falls under. A qualifying product must have a thermal efficiency of at least 75% per the higher heating value HHV of the fuel. The legislative language that created this credit and the latest IRS guidance that came out last week do not specify anything further than that sentence above. So what costs are covered when a consumer, when one of your customers purchases a product and there's certain costs associated with installing that product and getting the site ready for what they've purchased? Costs in the purchase and installation costs, that includes labor costs for preparation on site. That doesn't include like the time in your retail store making the sale or preparation work. It's only for the on-site preparation, the labor, the assembly or original installation of the property, including wiring and piping to connect the home. So this could include things like the purchase cost, including sales tax, on-site labor costs, venting, any electrical work required, the hearth pad, because that's part of assembly, and on-site preparation. Also very important, the tax credit must be claimed in the year in which product installation was complete, and we'll get more into that later. So the incentive amounts. So this is a, quote, non-refundable tax credit. It can reduce your taxes owed to zero. You can carry over your credit amount if you zero out your taxes owed and you still have credit remaining to claim. You can carry that over to the next tax year. From 2021 to 2022, the credit covers up to 26% of purchase and installation costs. In 2023, that reduces to 22% of purchase and installation costs. There is no lifetime limit or cap on the credit to how much you can claim within that percentage. Some of you may remember the old Section 25C tax credit that had a $300 cap and a $500 lifetime limit. That is not the case for the Section 25D tax credits. So what happens after 2023 when the credit expires? Well, we need extension legislation. There is language in the Build Back Better package that's been discussed that would extend the credit through December 31st, 2033. So near a 10-year extension. The credit amount would increase the credit to 30%, retroactive to January 1st, 2022 through December 31st, 2031. And then it would go to 26% for the credit from January 1, 2032 to December 31st, 2033. There would be no limit or lifetime cap on the credit. The language does move the tax credit from 25D to 25C of the tax code, but there is specific language that specifically excludes this particular credit from the limitations that are on 25C tax credits. And the efficiency requirement language is maintained as it's written in the current legislation and IRS guidance. And we'll continue to keep members updated on the status of this extension and whether there's any advocacy need for reaching out to members of Congress to extend their credit or advocate in other ways. So how is the tax credit claimed? We get this question a lot. How does this work? So again, disclaimer, I am not a tax professional. I am not giving tax advice. This is just an example of how this would work for a very simple tax situation. For an individual, no dependents, no conflicting circumstances that would prevent a very basic individual from claiming the credit. So the federal government considers your taxes owed until April 15th is when your taxes are due. And any taxes that you pay beforehand are considered like a prepayment. So say, for example, an individual owed $10,000 in taxes in 2021, but because they didn't reconfigure their federal withholdings, and this is someone who's having federal like payroll taxes taken out on their paycheck each time they're paid. So throughout the year, they paid $11,500 in taxes, which means their tax refund would be $1,500 because they overpaid. Say this person purchased a qualifying pellet stove in 2021, and the total expenses were $15,000. 26% of $15,000 is $3,900, depending on their tax situation. Again, this is just a very basic baseline tax example. This would reduce those taxes owed to $6,100. So that's $10,000 minus $3,900, which is 26% of $15,000. So the new tax refund amount would be $5,400. It would be that original amount that they owed, that they were due back, the $1,500 plus the $3,900. And on the paper form 5695, the credit would be claimed on line 5. This is the first time that we've seen biomass actually written on a tax form for these tax credits. So it's great to see it specifically called out. This also means in the future, when the IRS, when in their tracking of statistics of income, of how many people are claiming the different tax credits, this will be a specific data point. It's not lumped into a bigger sum of other energy tax credits. It's specifically called out on the form. So we'll be able to better track how this credit is used, how many people are using it, how much money from the government is being allocated for this credit. So that is great news. And we hope it will stay that way with the biomass called out specifically. So filing electronically, a lot of people file electronically using TurboTax or H&R Block. I went through H&R Block's website to see how this would work in practice. So on H&R Block's website, when you get to the credit section, you're taken to a list of different kinds of credits. And when you click on home and vehicles, you'll see here residential energy credit, mortgage credit certificate, electric vehicle. You would click on add residential energy credit or credit carry forward, form 5695. And the first screen on H&R Block, at least, says it has residential energy credits and lists different products. And it asks, did you buy any of these in 2021 or do you have a credit carryover? When you select no, you will then be taken to alternative energy credit, which is where you will find qualified biomass fuel property costs. When someone clicks on learn more, this is the information that's displayed, which is accurate, which is good. Great job, H&R Block. So I did a little test to see how this would work in practice if our example that I showed earlier about how the very basic tax situation would work in practice. So this example, the original tax return amount would have been $942. When I added $4,000 for the qualified biomass fuel property costs. So in this example, I'm saying I spent $4,000 total on the purchase, the installation, everything, all the qualified costs. And then when I hit next, it then calculates what's 26% of 4,000. It's $1,040. And you'll see here that it added that to the tax return amount. So even though originally it looked like, oh, you don't owe any taxes, you're getting a return. Again, the government doesn't consider your taxes paid until you file your tax return. A return and a refund are different things. So we'll look at later on in this presentation who is claiming the credit and what income levels, because if someone has zero tax liability, then they're not able to really claim this credit because you have to have some taxes owed in order to reduce your tax liability. You can't have negative dollars owed to the government. So how does one find qualifying products? So retailers, distributors, reps, ask your manufacturers which of their products qualify. You can ask them for their certification statement declaring which products qualify. A consumer does not need a certification statement to claim the credit, but it's something good to have. And I think nearly all manufacturers, if they have products that qualify, they've created a certification statement. Another source is the EPA certified heaters database. And there we go. So before I show you the database and where to look there, these are just some examples of manufacturer certification statements that I've found online from various manufacturers. This is just examples. It's not the definitive list of certification statements. There's just some examples of what they look like, what to look for, and they're in various places on manufacturer's website. If you're a manufacturer on this webinar or you're watching it later, I encourage you to put somewhere on your website a link where a consumer or retailer can clearly find it to find your certification statements or a list of which products qualify for the tax credit. So with the EPA wood heater and central heater databases, I encourage you to get familiar with these databases and also be aware that not all information is up to date. It's updated manually by EPA, and always check with your manufacturer if you aren't sure about a product. So as an example, here's what the EPA database looks like. You'll see the column, it says overall efficiency, HHV, and the list of efficiency numbers. So that's where you can look just at a glance to check if a product meets the credit requirements. But again, always check with your manufacturers or your reps to make sure that a product qualifies or if it does not. So who is claiming the credit? So I went through, it's called the IRS Statistics of Income, their tax liability, tax credits, and tax payments by size of adjusted gross income for tax years 2019 through 2013. And when looking at the number of tax returns and which credits, like how many tax returns claimed the residential energy tax credit, you'll see when looking at income levels that this is truly, and it skews more towards upper middle class households, but it is the US median household income is $65,000. So the standout category here is those households that make between 100 to 200,000, but the $50,000 to $75,000 households are also claiming this credit, and lower income are as well. You can't ignore that income category because people are claiming the credit, and you can't assume that because they don't have a lot of money that they wouldn't want to claim the credit or buy a product that qualifies for the credit. So when thinking about when a consumer comes into your store and if they're looking to save money and thinking about what products meet the tax credit or not, know that this is an option for people, and what their income is doesn't necessarily determine who is going to be claiming the credit. So keep this in mind of like when you're talking with customers, and I encourage you to market the credit, the tax credit, to anyone you're talking to who's interested in saving money and getting a tax credit on their tax return. Now, keep in mind, the credit is not a rebate. They're not necessarily going to get the full 26% in 1 year if they have a lower federal tax owed. They can carry forward the credit to reduce their taxes owed in the following year. They can do that, the carry forward allowance. But this is not a rebate, it's a tax credit. So I'm going to go through some frequently asked questions. And if you haven't already, if you have some questions, please feel free to type those into the chat at any point, and I will come to those at the end of this FAQ section. But I'm going to go over some of the most frequently asked questions in case they're on your mind already. So with that, the first question that we get a lot is, can a consumer claim the credit for a qualified heater installed in a new, secondary, or hunting cabin or vacation home? And the answer is yes. Under Section 25D, the tax credit can be claimed for qualifying products installed in a new home, second home, vacation home. The second home just can't be an investment property, meaning it cannot be a property that you rent out. If a customer purchases a qualifying product in 2021, but it isn't installed until 2022, when would they claim the credit? So they would claim the credit in the year in which product installation is complete. So if a product installation was completed in 2022, they would claim it on their 2022 tax return when they file in 2023. Even if they purchased it in 2021, they would claim it in 2022 because that's when the project was completed. But keep in mind that the credit is for 26% of the purchase and installation costs in 2021 and 2022. But then in 2023, it goes down to 22%. So if someone buys a product at the end of 2022 and it isn't able to be installed completely until, say, January 2023, they could only apply to claim for 22% of purchase and installation costs, not 26%, because you can only claim the credit in the year in which product installation is complete. So be mindful of that as you get towards the end of this year. If the language in the Build Back Better legislation hasn't been enacted, which increases the credit and extends it further, this is what we have currently, with the credit being reduced to 22% in 2023. Right now, that isn't an issue. For 2021 and 2022, it's 26%, same percentage. So that isn't as much of a confusion point as it will be when we get closer to 2023. Another question, and this is marketing language, do highly efficient fireplaces qualify for the tax credit? And it really depends on the product, and don't rely on this marketing language that says, go, this is a high efficiency fireplace, oh, so it must qualify, it's highly efficient. But it might not. There's only a handful of fireplace inserts that I'm aware of that meet the credit, and I'll talk about that later on. But always look again to see if the manufacturer has a certification statement saying that the product qualifies. And if there isn't a manufacturer statement, look at the EPA list to see if it's on there and what the efficiency is. So a product doesn't, it's not required for a product to be EPA certified even to qualify for the credit. But every residential wood heater and pellet heater needs to be EPA certified. However, fireplaces are exempt, but I'm not aware of any open-faced fireplaces that are not considered wood stoves that meet the fireplace definition that qualify for the tax credit. So when we talk about highly efficient fireplaces, a lot of times we're talking about wood inserts or pellet inserts. So there are at least a dozen wood burning inserts and 5 pellet inserts that qualify for the tax credit. And I do have a very rough list of these products. I don't publish it because I haven't updated it, and it's not a definitive list of all the inserts that qualify. So I encourage you again to talk to your manufacturers and your reps about which of their products qualify and know what qualifies ahead of time. So when customers come to you to ask you these questions, you already have an answer for them. So another scenario, a manufacturer rep told me that one of their models, which does not appear on the EPA list with an efficiency of 75% or higher, is eligible for the tax credit because one of the runs conducted during emissions testing got higher than 75%. Does it qualify? Again, if a manufacturer issues a certification statement saying it qualifies, yes, it's on the manufacturer to then back up that statement if they're ever audited. And the IRS has audited manufacturers in the past to see whether or not their efficiency claims met what the requirements were. But as the language is written and with the manufacturer certification statement being able to be relied upon, this is a likely scenario for some products. So again, rule of thumb here is check with your manufacturers and reps. So another question we get is the hearth in a customer's home needs to be extended for a new insert that qualifies for the tax credit. Is the cost to have the hearth extended covered by the tax credit? And the answer is yes. This is a cost associated with the on-site preparation, assembly, or installation of the qualified property, and for the piping or wiring to interconnect the qualifying product to the home. So yes, that cost is covered. Does the tax credit apply to used stoves that are being resold as long as they meet the minimum efficiency requirement of 75% per the higher heating value? No. Section 25D, they have very clear guidance on this question, actually, that they treat an expenditure as having been made when the original installation of the qualifying property is completed. So only the original user installer of the product can claim the credit. So before I get to audience Q&A, we asked ourselves the question, well, now what? So I encourage you to visit our website. We've created a shortened link that if you enter exactly like this, bit.ly/stove tax credit, capital S, capital T, capital C, you'll be brought to our stove tax credit, our wood heater tax credit website, pellet and wood heater tax credit website with many resources, including this one pager that you can print out and have it in your store and hand out to consumers. Also, I recommend that you determine which products you have in your inventory or being offered for sale that qualify for the tax credit. Be a resource to your customers and be able to have that knowledge and be knowledgeable on what qualifies ahead of time. And again, this consumer one pager is very helpful. It has a lot of great information on it, a lot of questions that have been asked by consumers. is on this form, on this little handout, which can be downloaded at our website. So with that, if you have any questions, please enter those into the chat at this time if you haven't already. I see we have 2 questions, and Emily, I'm able to view them. So let's see. I'm going to handle Mark Mastropolito's question first. Is masonry work included on a fireplace insert into a brick masonry chimney that has a water leak into the firebox? So we've been asked this question before, and when looking at the language of which costs are associated that can be covered, the definition is costs associated with the on-site preparation, assembly, or original installation of the qualified property. So I would say yes, maybe masonry work is included. We have not answered this on our FAQ. We might have this on our website, but as always talk to a CPA about this. Yes, they're not as familiar with our industry as many of us are to answer this question potentially, but always check with the CPA about covered costs. I would say yes / maybe to answer that question. Hang on, lots of questions coming in now. Are all freestanding pellet stoves included in the tax credit rebates? I don't believe all of them are. Qualifying products must have an efficiency of at least 75% per the higher heating value of the fuel. So I encourage you to go to the EPA website with the list of residential wood and pellet heaters and sort the list by efficiency and look at which products qualify. Not all pellet stoves necessarily qualify for the tax credit. I'm going to go back to the question at the top before going to the others. So the question is, we understand that the IRS is still considering issuing guidance as opposed to just updating Form 5695. We assumed 5695 was updated in absence of substantive new guidance. If more guidance is provided, is it typically retroactive to the beginning of the year? If more guidance is provided, it would be retroactive to the beginning of when the credit was initiated. So it would be retroactive to January 1st, 2021, because that's when this credit was became active and available to take. So it would be retroactive. Any guidance would be retroactive to January 1st, 2021, when this tax credit first came into availability. So down to questions. Okay. If a masonry heater builder does on-site testing showing 75% HHV, can the consumer get the tax credit? Yes, they could do that. And I'm guessing that masonry heater builder would, but if they do on-site testing of the masonry heater built on-site and they 75% and they issue manufacturer certification statement, then yes, the consumer can rely on that statement to apply to claim the tax credit. Yes. Another question, take a sip of water real quick. If a wood insert did not pass EPA, but it is greater, I'm guessing but the efficiency is greater than 75%, can someone still get the tax credit? So if the wood insert, if it's no longer an insert, and if it meets the fireplace definition and can be sold as a fireplace, and it has an efficiency of 75% per the higher heating value of the fuel, and the manufacturer can back that up with some kind of testing, and they've issued a manufacturer certification statement, then yes, a consumer could claim the credit for that product if they have that statement. So can you apply for the credit more than once? Meaning if a customer purchases a stove in 2022 and applies for the tax credit and then buys another stove in 2025, can they apply for the credit again? Yes. So well, first the credit has to be extended past 2023, but yes, because there is no lifetime limit on how much you can claim and how many times you can claim it, you can claim it multiple times. Another question, if a customer buys more than one stove, can they get the credit for both stoves? Yes, they can do that. Actually, on the IRS form 5695 and on the electronic form, in the instructions, it says if you've purchased more than one qualifying product, include those costs in the total. Or if you've purchased multiple products for multiple properties that are within the credit eligibility, then enter it into the one line as one total. So yes. Let's see, question. My state of Maryland is offering a rebate. Can the customer get the tax credit if they get a rebate from the state? So it depends. And we have the answer to this on our tax credit website, actually. So I'm going to pull that up real quick, actually, because I can read to you the exact response to that question. The IRS has provided very clear, as clear as they can get, instructions on this exact question of state rebates and how that interacts with. So let's see, where's the rebate? More than one qualifying product. While I look for this, feel free to enter, everyone feel free to enter other questions into the chat if you like. So let's see, taxpayer, qualifying heater, here it is. If I buy a qualifying product under and claim a state utility, other rebate, change out program, do I have to reduce the amount of the federal tax credit? So it depends on each taxpayer's situation. Always consult a taxpayer for issue specific, a tax professional for issue specific guidance. When it comes to, and so there's information here on our website about this question of, can the customer get a tax credit if they get a rebate from the state? Rebates generally represent a reduction in the purchase price or cost of property. So the taxpayer must exclude the amount of the rebate from the amount of the qualified expenditure on which the taxpayer calculated the credit. So you do need to reduce the rebate from that you got from the state. Not reduce the rebate from the state, reduce the amount that you're claiming for the federal credit by the amount that you got from the state as a rebate. And again, this is outlined on our tax credit website. And this text, this language is specifically from the IRS guidance documents. And question, will these slides be available for printing off? Yes, we will be posting copies of the copy of this slide with the webinar recording when that's uploaded. So question, extending this program through 2033 would be great, but have you heard anything about them discontinuing this program early? I have never heard that. This program was put in place by federal legislation, and it's active through December 31st, 2023. And I've heard zero discussion about discontinuing the program early. The only way to discontinue it would be through legislative language that would end the program without a replacement for the program. So definitely a miscommunication out there if you've heard that. Another question, a consumer contacted us stating they only could see on 5695 the main home and nothing about a secondary home. Were they using the form before it got updated? That's very possible. They updated the form, I think it was before January, they updated the form 5695. Right now on the form, in the instructions for the form, which again are on our tax credit website here, they do, I'm gonna pull this up since we're live, for the instructions for the form. So here's the form and here's biomass on line 5. And it doesn't say specifically on the form here, secondary home, but in the instructions for the form, which were published on January 7th, 2022, they talk about home and main home here. And they talk about secondary home on here as well. So it's very possible that the consumer that you talked with had not yet seen these instructions. I believe in the instructions for electronic filing. Oh, I'm sorry, you can't see my screen. I'm going to stop share and then share screen. Apologies for that. Thank you for pointing it out. So on our website here again, I'll show you. Earlier, I'd pulled up the FAQ for buying the credit under a state utility or rebate or change out program. So that's under our FAQ here. So again, here's the information about rebates. So to read that word for word, go to our website. And I'll go back to the form here. So these are the instructions for form 5695. And they mention home and main home under who can take the credit. And they also, like, this is for in general, what's new from the authorizing legislative language. And then under residential energy efficient property, they talk about what products qualify. Here's biomass fuel property, uses of residence, but this is section 25D. So they get into detail continuing on here about secondary homes. And I don't want to take up too much time here going through this, but it's in the guidance. And I know with 100% certainty that you can claim the section 25D credit for a secondary home. So back to the chat. Okay, let's see. Question. I'm not sure that the manufacturer is the ultimate authority if their product qualifies. Congress only said that it has to be 75% efficient HHV. There is no mention about relying on manufacturer certification statement. Moreover, I've rarely seen a manufacturer statement show how or why they calculate the efficiency. So in the congressional language, that's correct. They say it has to be 75% efficient HHV. I don't know of very many, if any, products that are being claimed to meet the credit that aren't on the EPA list or have the overall efficiency HHV. But the language, the IRS guidance does allow for the manufacturer certification statement to be the end all be all when it comes to backing up whether a product qualifies or not. They have that in their guidance on manufacturer certification statements, which I believe is, let's see, update previous guidance. Here it is. It's from the 2009 notice, which, yes, it's from a 2009 document, but this is what they have in place, and it stands as the additional guidance in addition to the legislative language. So they talk about, what page did I say that was on? 12 to 17. So let's go there. I just want to show you where it is. They talk about biomass burning stove. Scrolling. Okay, geothermal heat pump, taxpayer reliance. Okay, this is about building envelope components. Taxpayer may, okay, building envelope, certification statement. It's not, so building envelope component, they have requirements for what they call building envelope component and requirements for everything else as well. So they can rely, see, contents of manufacturer certification statement, specific information. A consumer can rely on a manufacturer certification statement for their own paperwork requirements. Well, not requirements, their own paperwork. You're not being asked to submit a manufacturer certification statement when you file your taxes. You're hanging on to that in case you as an individual are audited. But again, the IRS could audit or ask a manufacturer to back up their certification statement. So there is the IRS audit there. So a consumer, they can rely on the certification statement, but if the IRS challenges the statement, and find that the product does not qualify, then that product no longer qualifies. And I don't believe it's retroactive application. So let's see, another question. What would happen to a consumer who claimed a tax credit on a what would happen to a consumer who claimed the tax credit on a manufacturer certificate claiming the 75% HHV? When audited, it was not a true 75% HHV. Would the consumer be billed later? So say a consumer bought a product and finished installation in 2021, and then they claimed the credit on their 2021 tax return when they filed their taxes in 2022. And they get their their refund, and then say, like a few months later, the IRS audits that manufacturer and that product that taxpayer had just gotten tax credit money for. And again, I'm not a CPA, I'm not a tax professional, but from my understanding, the consumer who has already claimed the credit, they would not have to pay it back. Like, it's not their fault. Like, they relied on the manufacturer certification statement. Now, if the certification statement was revoked, or whatever word you want to use, before the taxpayer claimed the credit, they would not be able to claim the credit, and then it would be on them. Like, they would be, it would be a false filing, or if anyone ever has messed up on their taxes and you get a letter about, oh, actually you owe this and you messed up your taxes, so you have to pay this back to us plus interest. I'm guessing that's what would happen if someone claimed the credit for a product that didn't need it, but the manufacturer certification statement was revoked before they claimed the credit. So the IRS has only ever revoked a manufacturer certification statement once, and I think it was in 2009 or 10. I believe we have a link to that case on our website, and it was for a hydronic heater, and I forget what the issue was, but the efficiency, it didn't meet the requirements at the time, so their statement was revoked. All right, well, I'll give it another minute in case anyone else has questions, but feel free to send me an email if you have any questions. No such thing as a stupid question. And of course, please do go to our tax credit website, which has all of these frequently asked questions and more, and resources, and the links to the IRS guidance. And we always post the latest hot news update at the top of the page if there's been any new activity. So this is January 2022, and this will be updated for when we do February. And yes, I can put the HPBA links in the chat. Here's the link to the website here, and that pretty much has all the links to everything that I've discussed here, like all of these forms. So if you have that link that I just put in the chat, you have the link to everything. And then the link to view this webinar recording when it is posted, and to view the webinar slides and download those. Here's a link to our webinar page. And we have one more question. A homeowner wants to put in an outdoor stove, and their propane furnace is old. Would the new propane be covered in this? Homeowner wants to, and I'm not sure if I understand the question. If you could email that question to me, to the person who posted that, I'll put my email in the chat as well. It's on the screen, but please send me an email with that question, and I'll talk it through with you. And again, if you have any other questions, anyone who hasn't asked a question and thinks of one later, please, please, please feel free to send me an email and try to get your question answered for you. So again, all of this will be posted on our webinar page later, and tell us how we did. We'd love to hear your feedback. So Thank you everyone for joining us today. I hope everyone is staying warm. Thank you for your attention and hope to see many of you at Expo. Thank you.